Hey everybody, welcome to Money's No Object. I am your host, Dylan Howell. This is episode number 136 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think can be useful for you in your long-term financial journey. Today, what we are going to begin talking about and what we will talk about over the course of this week is protecting your finances. Because what use is it to build the financial life that you've always wanted to live if you cannot protect that financial life in some way, shape, or form? And so we're going to begin that conversation today by talking about different types of insurances that you should have in place in order to protect your financial life, having the correct coverages and allowing them to protect you from any instances of tragedy that could put a damper on your long-term financial dreams and your goal of long-term financial freedom. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything that you leave down there. If you're listening on Apple or Spotify podcast, be sure to subscribe and leave me a review on either one of those platforms, and that would be really useful for me, and I can keep putting out that good content for you guys there. And then follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things that I'm putting out on the long form episodes daily on YouTube and the podcast. And then if you need somebody to help you to build a financial plan that is specific to you and your family and your situation, and that you can walk right down and I can keep you accountable to that plan over time, I can definitely help you do that. Just go to my website, www.mnowithdylan.com. Click on the Work with Dylan tab, and you can choose the financial coaching session type that would work best for you, and we can begin pushing towards your long-term financial goals together. Now, who really likes talking about insurance? Who really likes discussing insurance over and over and over again? Insurance for most people, and just about everybody, honestly, becomes a strain on your cash flow because you have to pay those premiums, you have to keep paying, and there's really not a big benefit other than the protection that they offer you. But that is not completely true. That is just the optics of it all. That is just how it looks to all of us. We feel like the idea of having insurance and that insurances that protect us are just making the insurance companies money. And no doubt insurance companies are doing perfectly fine taking in your premiums and reinvesting those premiums time and time again and collecting premiums from other people. For sure, that is occurring. But on the other hand, there are certain types of insurance that we have to have in place, that we need to have in place, or if we get to a particular place in our financial life, we need to have in place in order to continue to thrive financially. Because any type of insurance is a buffer between ourselves and tragedy. It is a buffer between ourselves and something that could happen in our lives that would set us back financially, and obviously things that could also set us back health-wise and mental health, physical health, things like that as well. But we need to have certain insurances in place. And so in this episode, I'm going to talk specifically about the types of insurances that you need, what that needs to look like in your specific life, and when certain insurances should come into play for you. And it's going to look different for everybody. Obviously, I'm not suggesting that everybody go out and get all of these insurances right now, but there are many of these that you do need to have right now. There are many of these that many of you are going to look and go, okay, this fits my situation exactly. I need to go get this. And so I'm going to explain what a couple of these are, and many of these are going to seem obvious to you, but hear me out because I'm going to dig in to some more as we move through this episode that are a bit more nuanced than the ones that I begin talking about from the get-go. So let's go ahead and get started. The first one that you need to make sure that you have, and everybody should make sure that they have this. If you own a vehicle, you have to have car insurance. You need to make sure you have car insurance, and not just make sure you have car insurance. Make sure you have the right type of car insurance. Make sure you have the car insurance that will allow you to be covered and that will allow, if something tragic were to occur, that it's not going to wreck your financial life. Because, for instance, the Insurance Information Institute reports that the average loss per claim on cars is around $4,900. So just imagine having to pay that kind of money out of pocket. And not just having to pay that kind of money out of pocket for your own car. Think about the expenses that there could be if you were to hit someone else. You would have to fix their car and maybe pay for their medical bills if there were anything like that had to occur. And so you need to have certain types of coverage in place as far as your auto insurance, as far as your car insurance, that will cover you correctly. So obviously we all need to have liability coverage. So if you are responsible for an accident, Your liability coverage will cover the cost of any injuries or property damage caused in the collision. Most states require you to carry a minimum amount of coverage, so check to understand your basic requirement with your state. So make sure you know what that looks like. And then also there is collision coverage. So this covers the cost to repair or replace your car if it's damaged or destroyed in the wreck. So the liability coverage has to do with somebody else's, right? Because if you get into a wreck with someone and it's your fault, you need to make sure that your insurance pays that person, or else you're going to have to do it out of pocket, which can be, again, extremely costly. So that's the liability coverage. But the collision coverage is if I hit somebody and it's my fault, then my insurance will cover my vehicle as well. And then there's also comprehensive coverage, and this is the level of insurance that covers your losses that aren't caused by a wreck, such as theft, vandalism, flood, fire, hail, all of these types of things. And if you live in the South and the weather changes all the time and you never know what to expect, it could snow in March, or it could be 90 degrees in November, whatever it may be, you don't know what is going to occur. So having some type of comprehensive coverage in place is extremely useful as well. And so having that auto insurance is extremely important. That's the first type of insurance that we need to make sure that we have in place, because it can become extremely costly if something is your fault and you don't have the right coverages in place, especially if you're just somebody who holds liability coverage and you have a substantial amount of financial assets. You need to make sure that you can cover anything that comes your way and any type of medical bills of somebody that you may hit or things like that. So just be aware of what could occur, and cover yourself correctly when it comes to auto insurance. Then obviously we all need to have homeowners or renters insurance. So depending on your situation, whether you are renting or whether you own a home, you must have homeowners or renters insurance. Now, I'll start with renters insurance. Renters insurance is extremely cheap. So if something is your fault, your place gets broken into or something of the like, then you have renters insurance in place that will cover the things that you need it to cover. And it's really, really cheap. I'm talking in certain areas $15 or $20 a month tops. And so it's a really inexpensive type of insurance that you can have. And then obviously your homeowner's insurance needs to take care of your home if something were to occur. So your homeowner's insurance policy needs to include extended dwelling coverage. And so what this does is it adds an extra layer of protection above your policy limits. And what this does, the insurance company will replace or rebuild your property even if the cost exceeds your policy's coverage, which is a huge thing that you would love to have in place. And there's a limit to how much they'll pay, however, usually 20 to 25% above what you're insured. And you have to keep in mind that the higher your home's value is, the higher the need for extended dwelling coverage. Another note is you need to check and make sure that you have things like flood or earthquake coverage, especially if you live in areas that are susceptible to floods or earthquakes. So you need to make sure that those types of things are in place as well. But like I said, if you're a renter, right, you're not off the hook. Obviously, if the place were to burn down, that is not on your back. But you have to think about your possessions if the place were to burn down. If the place were to burn down, the things within your dwelling, you are going to have those covered, and that will be your renter's insurance. And so without renter's insurance, it's up to you to replace your belongings if they're lost in a fire, flood, burglary, or some other disaster. Remember, if your full emergency fund is in place, right, you can have higher deductibles and cheaper insurances in both homeowners and renters, right? Your emergency fund can help you in that place to get cheaper homeowners or renters insurances. Because for those of you who don't know, if you are going to buy any type of insurance, the higher your deductible, meaning the higher amount that you are going to have to pay before the insurance company covers any type of loss, the higher that amount is, then the lower your monthly premiums, right? The amount that you pay to the insurance company monthly will be, because they have to cover less. They are on the hook for less. And so therefore they will make you pay less monthly. And so if your emergency fund is in place, you can have higher deductibles and decrease those premiums systematically. So have your homeowners or renters insurance in place, regardless of which one you live in. You need to have one or the other in place for sure. And then number 3, health insurance. We need health insurance. And this is such a hotly debated topic. This is such a political topic in a lot of cases. But health insurance is something that is so necessary for our long-term health and for our long-term thriving financially. And so medical debt contributes to nearly half of all bankruptcies in America. And that is a shocking statistic, right? It's a type of debt that we rarely think of, but not being able to pay medical bills is a huge, huge thing. And so if you're uninsured, you're leaving yourself vulnerable to potential financial catastrophe. One unexpected major medical emergency could amount to hundreds of thousands of dollars of expenses. So you cannot put yourself in that type of position. So the high cost of medical insurance, it's not an excuse to go without coverage. Even if you don't go to the doctor often, you might want a higher deductible plan that's cheaper, that you have an HSA qualified plan. Those types of things can be really, really helpful. And obviously, any type of plan with an HSA can be helpful because we've talked about this before. HSAs are triple tax advantaged. You can put money into your HSA, and it is a tax deduction when you put the money in, and then it grows tax-free, and then you can withdraw it for qualified medical expenses tax-free as well. And so the HSA and the HSA qualified plan with a high deductible could be a good method for you to decrease your monthly cost of health insurance and yet still have health insurance on your side. And a lot of workplaces also offer these high deductible plans as well. And this is typically the best way to minimize your costs, especially in two ways, right? Especially if you are extremely healthy. If you're extremely healthy, then a high deductible plan is obviously going to be helpful because it's going to decrease your monthly premiums, which is going to decrease your overall costs, and you're not really going to pay anything in the way of medical bills. And then if you are not healthy at all, right, you'll meet your deductible quickly, and then you'll be covered 100% from there. But if you're kind of in the middle, if you're kind of in that place where you have some things going on, but they're not super bad and all these types of things, you'll push towards that higher deductible every single year or something like that, and you're not guaranteed to touch it, then you may be best served by a different type of plan. But that's a way that you can minimize your health insurance costs. But regardless of what type of health insurance plan that you are eligible for, that you can get, you need to have health insurance coverage. As long as we are not covered by something like Medicare or Medicaid or something like that, we need to have some type of private insurance. We need to be covered because we need to make sure that, if we do build up substantial financial assets, that one medical event doesn't drain our investments, drain our bank accounts, do all these different types of things. We need protections in place. And undoubtedly, I'm not arguing with anybody that health insurance is expensive and the cost of health care is expensive. My wife is pregnant right now and things are expensive, right? Even when you're paying the monthly premiums can be 100% expensive. And that is just the name of the game right now. And you can gripe about it as much as you want, but if you don't have the correct things in place, it can be a detriment to your long-term thriving financially if you do not have some type of health insurance in place, if you do not do the things that you're supposed to do in order to make sure that any type of health event, any type of medical issue is correctly covered by your health insurance and by the deductible that you would have to pay. So be prepared for that. Obviously, your emergency fund goes a long way here because your emergency fund can help you to be in a higher deductible plan to where you can decrease your premiums and things of the like as well. And so that is the third of the insurance types that you absolutely need. The fourth of those types of insurances is term life insurance. And we've talked about life insurance a bit previously, but I want to dig in just a little bit here and talk about why I say term life insurance and not whole life insurance or universal life or things of the like. Term life insurance is 100% what we want to be looking at, and I will explain why. I mean, first of all, let's just talk about the need for life insurance in general. If you and your spouse live in a household and either you're bringing home all of the pay or they're bringing home all of the pay, or you guys are splitting everything, or you're both bringing home paychecks, things of the like, no matter what position you are in financially with your incomes, you both still need life insurance, especially if you have children. If you have children, it is a 100% must. You have to have it. And here is why. Let's just say that you bring home all the money and your spouse is a stay-at-home husband, stay-at-home wife, stay-at-home mom, dad, whatever, right? Let's say they stay at home with the kids. Well, if you were to pass away, then quite obviously they need money in order to make up for the income lost until they can find some type of work and they can continue to care for your family. Not only that, Maybe they need the money to pay off the home that you all were living in so their kids can stay there. Maybe they need it to pay off any type of debt that you guys had outstanding. Maybe they need it for any number of things, such as childcare. Right now, they're going to have to get a job. They will have to pay for childcare. And so they need some type of umbrella for them. They need some type of coverage that will allow them to, go on about life as normal as possible if something were to happen to you as the primary breadwinner. Now, if you're the primary breadwinner and something happens to your stay-at-home spouse, then obviously you now have a need. Now, you don't have as much of an income need, but now you are going to have to pay for childcare. And this can be a very substantial cost, especially for multiple children. Well, you need something to cover that. What would cover that? Well, your life insurance would cover that if you had life insurance on your stay-at-home spouse. And so that is a reason that they might need it. Well, let's say you are both bringing home paychecks, right? You're both bringing home paychecks. You're paying for your home. You're paying for things for your kids, all this type of stuff. You're likely living a bigger lifestyle than just one person bringing home a paycheck on either side. Well, if one person were to pass away, then you need to supplement that income that you lost, and you have to find a way in order to continue to live the life as similarly to what you were living as possible, or at least that would be the goal. Therefore, you need life insurance in place. And then the question becomes, why term life? Why term life and not whole life insurance? Well, just quite simply put, and I'm not going to dig way too far into it, the cost of whole life insurance is astronomical relative to term life insurance. And we don't want to be investing in insurance, right? Insurance is protection against tragedy, but our investments, we are trying to grow into the future, right? We're trying to create the best long-term future for ourselves as possible. And we don't want to have to worry about that money, having to be paid out in a life insurance or whatever it may be. And the rates of return on whole life, universal life, variable life, whatever it may be, are not comparable to what you can make in the market, and the fees are extremely high as well. So just whammies all over the place. I would not do any type of whole life product. I would definitely do a term life, and you want it to be a substantial amount of money, substantial enough to where you can cover your needs, or you can cover your spouse's needs, or your spouse can cover your needs if you are to pass away. So you need to be in that position to where you can take care of the income loss, you can take care of the need for childcare, you can take care of anything that you need to take care of in the likelihood of somebody passing away. And term life insurance is extremely affordable, especially for healthy younger individuals. So just go out, get it. It's not going to cost you a whole lot a month. Make sure that you have that in place, especially if you have children that are here. And so life insurance, we need to have it. We've got to have it at some point. Now, we're going to get into a few other types of insurances here, right? Those that I've covered to this point are must-haves. We have to have them at some point in our life. These others are going to be contingent, right? They may be needed. They may be something that you could cover on your own, but you need to keep them in mind as you move forward. So the first of those is an umbrella policy. And so an umbrella policy is a type of insurance that adds an extra layer of protection for you and your assets when you need coverage that exceeds the limits of your homeowners or auto insurance. For example, if you're at fault in a multiple vehicle accident, medical bills and property damages could quickly add up to more than your auto insurance will cover. If you're sued for the difference, your savings, your home, and even your future wages could be at stake. And so what you want is an umbrella policy to cover that for you. And so especially if you have substantial assets, or you're building up substantial assets, you're getting closer to that millionaire mark, you have to have some amount of umbrella policy in place, because if you have that in place, then anything that may go down, in a car wreck or things like that particular example that we just talked about, then you could have that covered without having to dig into your nest egg and having to slow down your wealth building journey. Even though any type of event like that is going to slow you down a bit, we want it to slow you down as little as possible. And so an umbrella policy would be extremely useful, and they're extremely cost effective. They're really, really affordable. So I would check into that, especially if your net worth is creeping up there, or is, definitely if you're, above the $1 million mark, multi-million, you need umbrella policies in place for, some substantial amounts of money to make sure that you don't get in a place where you're sued into oblivion just because you have the money to pay. So that would be one I would say definitely look into it, and especially if you have a high net worth to back it all up. Then another one, and this is going to be specific, especially to working individuals. So I definitely think that people should have this. But if you're a stay-at-home individual, then this may not be relevant for you. But long-term disability insurance, which protects you from loss of income if you're unable to work for a long period of time due to illness or injury. So if a permanent disability is to occur, or things that could happen that could really put you out for a long period of time, and you are in prime earning years and you are earning income for your family, then you need to make sure that if you were to lose the ability to earn that income, right, then something could be in place to cover that loss. Because life insurance is great, and life insurance is 100% necessary, and it covers when you pass away, right? But what if you're not passed away, but you can't work? That is going to be a tough situation. And most workplaces will offer you some type of long-term disability package, and you should definitely take it. It's typically very cheap, and it will allow you to have the right protections in place to stay free from losing the ability to work and losing all of the income associated with doing so. Now, just two more that I have for you that could be really good insurance coverages that could help you out in your ability to build long-term financial freedom. And the first is long-term care insurance. And long-term care insurance is a type of insurance that will cover a range of things, specifically like nursing home care, in-home care, your basic personal tasks like bathing, grooming, eating, things like that as you age, right? So having a long-term care insurance policy will allow you to be covered if you have to go into a nursing home or have some in-home help or things of that nature as you get older, as things may hinder your ability to do your daily tasks. And this is specifically important for individuals who have just moderate amounts of assets. And let me explain why. Because if you don't have much in the way of assets and you have to be put in a nursing home eventually, what will end up occurring is there's Medicaid in place, and Medicaid is for low-income individuals. And we don't want you in this place, but this is a reality for many, is that Medicaid will pay for your nursing home, in a nursing home, obviously, that they have approved, if you meet certain qualifications income-wise and assets-wise, and they will cover it. No problem. You don't have to pay for it. It's all good. Even though that's not the ideal situation, Medicaid can step in and take care of that if you don't have a lot of assets. If you have a ton in the way of assets, then long-term care insurance can be extremely costly. It is a costly type of insurance. And so as you have all of those assets sitting around, you could likely self-insure yourself. You could likely pay for the facility that you have to be put in, or the help that you're going to need, or any type of assistance, or individuals that you would have to hire in order to help you to get through your later years. You could likely pay for that with your very high net worth. But if you are in the middle, that's where you fall into a kind of a chasm. And the reason that is because if you're in the middle, then you've likely got enough that maybe you could retire on and live on in retirement. But the problem is that you have some assets, you have a little bit of money, things like that. But if you were to need to pay for a nursing home, and it had to be out of pocket, well, it would very quickly diminish the amount of assets that you have, and it would take a lot out of your retirement accounts, a lot out of the income that you're bringing in. So that could be a big drain on you. And then also, if you wanted to take the Medicaid route, then there would be a big pay down in order to get to that place where you would even qualify. So it would take a long time to even qualify. So you would have to pay out of pocket basically until you had nothing before Medicaid would step in. And so what you want to have in place is a long-term care insurance policy, which, like I said, is pretty costly month to month, or they'll take annual premiums, semi-annual premiums, things of the like. If you do that, if you do take long-term care insurance, it is useful because it will cover you up to a certain amount for those long-term care facilities that you may need to enter, and it will help to protect your assets from the drawdown of your assets in order to pay for some long-term facility. So you would likely want to get that around age 60, but you don't want to wait too late. The older you get, the more expensive it gets, and the earlier you get it, it is an expensive type of insurance, so you don't want to be paying on it too long before you are very likely to use it. So that could be something that would be very useful for you all who may fall in that mid-range of having assets. And then Lastly, this is a smaller one, but can still be very important nonetheless. Identity theft protection. We know that we live in a technological world. We live in a world where people are getting hacked every single day. We're living in a world where malware, spyware, ransomware, all these types of things are occurring on a wide scale. And if you are a victim of these types of things and your information gets compromised and you have this type of issue, then it could be a long road to hoe to get your financial situation back to where it was. And so you need to make sure that you have some type of identity theft protection. Again, this is something that is, it's optional. It's something you don't have to have. But it can be really useful for you, and it's not super expensive. It's relatively cheap, and you can pay on it month by month and have that protection in place if something were to occur to your information, if you were to be compromised in some way. So that's something to keep in mind as well. Look, guys, the bottom line of all this is not that you need to spend all of your money on insurance. The bottom line of all this is not that maybe you need all of these insurances. The bottom line of this is not that I'm trying to sell you a product, because I'm not out selling products. I'm just telling you, based on what I know, based on what I've seen, based on the most common types of issues when it comes to individuals going into financial distress over things that could have been covered by an insurance that wasn't that expensive. These are the things that you definitely need to have in place. You need to understand these different types of insurances. Obviously, the four that I said you have to have. You have to have auto insurance. You have to have life insurance at some point. You have to have health insurance, and you have to have homeowners or renters insurance. And then the other four are obviously optional. They are obviously something that it just depends on where you are, and it depends on what you think you need. But having those things in place cannot hurt. And many of them are really cost effective. The only really expensive one was the long-term care insurance. So keep these things in mind. Understand that you can't just build a financial life and just have your money there and just say, okay, I built it, it's here, right? You have to put protections in place to make sure that you can keep it. It's one thing if you can build a strong financial life. It's one thing that if you can build a nest egg and build, this long-term wealth and this generational wealth for you and your family. But it is a whole nother thing if you can keep it, if you can make sure that it's going to stay around, if you can make sure that it's going to be well equipped for the next generation, if you're going to make sure that it's even going to be around for the next generation. You need to make sure that that is going to be the case, because again, we are managers of money for God. We need to make sure that we are managing the money that we have well and being prudent in the things that we could choose to do to make sure that our money lasts and make sure that we are not put into financial hardship just because of our own negligence. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to get back to you there. If you're listening on Apple or Spotify podcasts, then make sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things that I'm putting out daily on the YouTube and podcast episodes that are more long form, like this one. And then if you need somebody to help you walk through your financial life, create a plan that is specific to you and help you to keep accountable to that plan over the long term, then I can help you do that. Just go to my website, www.mnowithdylan.com. Click on the Work with Dylan tab, and you can choose the financial coaching session type that would work best for you, and we can begin pushing towards your long-term financial goals together. So tune in tomorrow as we continue to talk about protecting your finances this week, and we will be talking about estate planning documents and the importance of estate planning documents within your long-term financial plan. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howe. God bless.